Welcome back to a new stock toolbox video. In this video I wanted to improve my old correlation metrics, and it's part of the portfolio management tools. The old one looked like this and it needed all of these letters and was very cluttered. And was difficult to copy paste. And these were the formulas, and the new one looks like this, and it's way cleaner. And down there's just some calculations or some experiments, and you can remove them if you don't like them. And if you want to add more than these 18 stocks, for example, you just mark how many cells you want to add, right click, insert to the right, and then you added some new cells. And same for the bottom, just take some there, 7 below, and then you have new ones. And if you don't know the correlation, it means if a stock correlates perfectly, for example like Apple with Apple, it's a 1 because they are the same stocks, so they should correlate perfectly. And if you compare it with McDonald's, it correlates to 85%. And if you construct a portfolio, you ideally want stocks that don't correlate at all or are negatively correlated to achieve some diversification benefits. And stocks that aren't correlating a lot, I marked them with some conditional formatting if they are below 75% negatively, or if they are close to zero, between minus 20% and plus 20%. And then you can construct your portfolio. And down below there's a theory I tried to test, but it isn't automated yet completely. In total, my correlations are here, and then how much they correlate depending on the other values, and how much they correlate on the weighting. And then on total we have a portfolio correlation of about 37% for these stocks. I'm not sure how I use it, but I will add this tool to the original very first video, and I will put it in the link below so you can check that one out too. And while I worked with this correlation sheet, I thought about my last video and the tool where I tried to find momentum stocks, and I wanted to see some correlations to find out why my stocks go up, why they go down. And I took like 100 to 300 stocks and I tried to find out their correlation. The first part for 40 days up to 1300 days. In the first set of data, it's a simple return from the stocks. It disregarded the time. It just compared how much the stock was worth like 1300 days ago and compares it to the price now, and then how much there's a difference or how much different ratios correlate towards the price. And the next set is the compounded annual growth rate correlation, which should be more reliable. And the different ratios are the 5-day moving average correlation, 20 days, and up to 200 days correlation. And the Correl multimentum is the price to 5-day moving average to 20-day moving average and so on, all multiplied. Then the inverse is where I weighted the 5-day stronger than the 200-day, where the 5-day was weighted at 3 and the 200-day moving average was weighted at 1.05. And then the correlation to the beta, then the relative strength index. Relative strength index 0 means it's the one of the last few days. Then MBV means the multimentum times beta times volume. The volume is overtrade, the current trade compared to the average volume. These are the combinations of multimentum times beta times volume over trade, then beta times volume, Then we have multi-momentum times beta, multi-momentum times volume, and the correlation to the volume. And if you look down there, the volume has very little correlation, basically none. Then the multi-momentum and volume has 57%. Then multi-momentum beta has 56%. Then beta and volume have only 12%. MBV in the sample size has 54%. But I'm not sure if I have to remove the square root of this one because it has a lot of multiplications. And if square root removal would be advisable. Then the relative strength index, if you look at this set of data, it basically has non-correlation. The multi-momentum is one of the strongest sets of data. And if you move to the moving averages, we can see, for example, for the 20-day, it has a very strong correlation for 200 days and upwards, but then it drops significantly at the 100-day mark. And the same is for the 5-day moving average, and somehow for the 800-day. We have to maybe look into that, what was 800 days ago. And for the 50-day, we see the drop at 100 again. And for the 100-day correlation, there's bigger margin of error for 300 and 400 days. And above 900 days, I guess. 200 days prediction is also very weak if you use like 40 days moving averages backtest. And this was just a very small sample size of less than 300 stocks. And I wanted to do more, but then the loading time is really long. And if you want to do it yourself, you go to the backtest, go backtest, show volume and relative strength index. Then you implement how long you want to do the backtest. Take 1000 days, for example. And depending on the holidays, there's a normal where there's no backtest. And I shorted it and I show errors. And you want to align all of the functions with this 0, the green one. And I will wait a bit for the loading. And as you can see now, because we backtested, then the 0 doesn't align with the last value. And then the moving averages get skewed. So there's a correcting formula, and it's 1. And if you combine them, then you get a circular dependency, and you have an infinite loop, and you get stuck in a loading screen, basically. So we have to correct it by 1 positive, and then you type in 201, and wait for the loading time. And then you can see that the last value here aligns perfectly with the 0. And voila. Then you have to wait a bit for the other data to load. And about the volume and beta, they are the most recent ones of today, and they can't be backtested as far as I know currently. And if you want to gather your data as well, you just mark these fields up to there. This is the backtest price to the left, and then you implement it to the 1000 days. And then the other values should adapt in the average. And that's how I did the backtesting. And you can add more or less stocks or different stocks if you're interested in, for example, in like only Tesla, Amazon, and the other ones that went big recently, if they have a correlation, and find out about that. Thanks a lot for listening again. And please subscribe, like, share, and hit the notification bell to support me if you want to see future content like this and have some insights from me. Until next time, thanks a lot. Bye bye.